Ladies and gentlemen, good day and welcome to the Q2 FY25 Analyst Conference Call of Newgen Software Technologies Limited, hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mrs. Aditi Patil from ICICI Securities. Thank you, and over to you, ma'am.
Thank you, Del. Good evening, and welcome you all to the Q2 FY25 earnings call of Newgen Software Technologies. It's my pleasure to introduce the senior management team of Newgen, who are here with us today to discuss the results. We have with us Mr. Diwakar Nigam, Chairman and Managing Director, Mr. T.S. Varadarajan, Whole-Time Director, Mr. Virendra Jeet, Chief Executive Officer, Mr. Arun Gupta, Chief Financial Officer, and Ms. Deepti Mehra Chugh, Head Investor Relations. I now hand over the call to Ms. Deepti for further proceedings. Thank you, and over to you, Deepti.
Thank you, Aditi. Good afternoon, everyone. Welcome to the Q2 FY25 results of Newgen. Before we move on to the discussion, let me highlight that this call may contain certain forward-looking statements concerning Newgen's future business prospects and profitability, which are subject to a number of risks and uncertainties, and the actual results could materially vary from the forward-looking statements. Past performance may not be indicative of future performance. The company does not undertake to make any announcement in case any of these forward-looking statements become materially incorrect, or update any forward-looking statement made from time to time by or on behalf of the company. For any further details, you may please refer to the Investor Relations section of our website. I would now hand over to Mr. Varadarajan for presentation of results, which will be followed by a Q&A. Thank you.
Good afternoon, everyone, and thank you for joining us for review of our Q2 FY25 performance. Newgen delivered another strong quarter, driven by continued momentum across our key markets. Revenue for the quarter reached rupees 361 crores, representing a 23% YOY growth. Revenues in EMEA region witnessed a growth of 21% YOY, and India region grew by 19%. APAC continues to be strong for the second consecutive quarter with 53% YOY growth. We believe these markets will continue to be a sustainable driver of long-term growth. Revenue growth in US region was at 17% YOY as we continue to work on our restructured strategy of tapping larger accounts in that market. We saw a substantial increase in license sales during the quarter, witnessing a growth of 52% YOY, followed by implementation revenues. Annuity revenues were at 205 crores. While banking and financial services continue to be our core vertical, we saw an increased traction in the insurance and government segment in the quarter. One of the most significant growth areas this quarter was cross-selling within our existing customer base. We continue to see customers expanding their adoption of our platform and solutions. This is a testament to the value of our platform offer and the trust our customer place in our as a strategic partner. We closed many significant deals during the quarter, which include a project of about 25 crores rupees from a large insurance company in India for building their system of engagement. Providing enterprise content management solution to one of the top financial institutions in US with an aggregate order of value of about $1.5 million. Received an order from a leading financial leasing company in Saudi Arabia with an order of value of $1.5 million, a loan origination and collection system. In India, we received an order from a large infrastructure financing services company with a value of 16.9 crores. In APAC, we entered into a contract with Singapore's leading financial institution. We added 8 new logos in Q2. Coming to our products and solutions, we are seeing continuous traction across our existing accelerator lines, including customer onboarding, SME lending, supply chain finance, payment hub, and trade finance. As part of our ongoing efforts to strengthen Newgen's footprint in the Middle East market, we have launched the Islamic Retail and SME financing suite. In India, our focus has been on expanding our presence in the captive finance segment, particularly with our leasing capabilities. During the quarter, we released new versions of our enterprise content management products, which are OmniDocs and OmniExtract. We also enhanced video KYC, an essential part of all digital onboarding processes. We also increased Newgen One Marvin Apex version. This is expected to further streamline complex workflows, enhance customer engagement, and ensure secure AI integration. We continue to receive accolades and analyst recognition. During the quarter, we were recognized in Forrester's Task-Centric Automation Software Landscape for Q3 2024. We were also recognized among notable vendors in the Content Platform Landscape of Q3 2024. We remain focused on executing our long-term strategy and building key competencies across our product line and customer-facing and implementation teams. As businesses embrace digital transformation, we are ensuring that we are all well positioned to support them with the right skills, expertise, and product innovation. We continue to invest and build internal capabilities in critical areas such as AI, Gen AI, and machine learning, which are becoming essential to modern enterprise software. We continue to invest in and develop our global workforce and their training and development programs. Continue to work on our strategic partnership with leading technology firms and industry alliances. During the quarter, we announced continuation of our strategic partnership in FA Data, a trusted core insurance solution provider. The partnership is aimed at helping insurers achieve centralized systems and effectively handle complex and content-rich processes. On profits and margin, we witnessed a growth in profits and expanded margin. Profit after tax was at rupees 70 crores for the quarter, witnessing a growth of 47% YOY. Our increased investment in competency development is reflected in our R&D and sales and marketing expenses. R&D expenses were at 9% of revenues for the quarter, and sales and marketing expenses were 22%. On the balance sheet front, our net trade receivables were at 442 crores as of 30th September 2024, which resulted in net DSO of 117 days. For the 6-month period, our revenues were at 676 crores, witnessing a growth of 24%. Profit after tax was at rupees 118 crores, witnessing a growth of 51%. As we look ahead, we remain focused on driving innovation, expanding cross-selling opportunities, adding new logos, and continuing to grow profitably. Thank you very much. We are now open for QA.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ruchi Mukhija from ICICI Securities. Please go ahead.
Congratulations on good set of numbers. I have 2 questions. Firstly, if you look at the APAC has seen 50% plus growth for second consecutive quarter. Essentially also there is recent growth for second consecutive quarter. This appears to be supported by a large project ramp-up. So is this ramp-up complete or likely to continue in the near future?
Yeah, Ruchi, thank you for your question. You're right. So what has happened, the APAC has grown this year on a base which was weaker last year. And predominantly in both the quarters, we have got substantial license deals out there. So these are typically wins which have resulted in a higher growth rate on that. Also, the orders which we have received are in the process of execution. They will be executed over the next 18 months, and they will have a long tail revenue to them. But predominantly to reflect on the growth of the H1 is on account of license wins and new logo acquisitions out there in that market.
Understood. Secondly, annuity-based revenue this quarter registered 14% YY growth, which is softer and has fallen below 20% mark after 10 quarters. So could you explain the reason and how to think about the trajectory going forward?
Yeah, I think this is slightly more complex to discuss because there are two factors broadly that. One is predominantly our shift in US from lower accounts to larger accounts. We have closed down a lot of existing accounts in small values, which are typical contributors toward the SaaS business. That's one part of it. So unless the momentum of logo acquisition starts in US, the new logo acquisition on annuity side will be softer because most of the other markets, the sales is happening still on the perpetual side. The second contributing factor is that if you look at deeper the data, you look at the ATS growth has been a bit muted compared to historical levels. And this is on account of a lot of large wins over last, at least 5 quarters are typically very long tail businesses. Their execution cycles have stretched. Thus, our ability to start realizing the ATS revenues have been, limited out there. But we are hopeful that this quarter, next quarter, we should be able to, close some of those deals and the ATS bucket should grow. So as Newgen has pivoted to larger deal sizes, they have correspondingly reflected in larger execution cycles and thus slightly delayed our realization of our subscription revenues. So two factors, mature market sales, especially in US on licenses, which is slightly less than our, the run rate of our business, and longer business and execution cycles which have muted down ATS. We think it's a transient affair. It may last for 1 or 2 or 3 quarters, but I think the nature of the business is it keeps on compounding annuity, irrespective of what we do. So I think as a matter, we may be able to recover it in 1 or 2 quarters and come back to a healthier growth rate of annuity.
Okay. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Aditi Patil from ICICI Securities. Please go ahead.
Thank you for the opportunity. So I have a question on order book. How is the order book grown in H125, and can you give some color on deal pipeline?
So Aditi, thank you for your question. So order book generally, if I remember the numbers right, has grown by roughly around 20-22% for H1 for this part of the year, which is, and also you should understand this is not the pending order book. Some part of it will be executed and some would be also pending to be execution. But if you look at just linear order book growth, that has been up roughly around 22% for H1. On the pipeline side, I think broadly, as you see the business, we have the traditional markets, they continue to grow. The deal sizes keep on going bigger, as well as our financial services base is becoming slightly wider with the offerings like trade or service request management. They're making the offerings wider. But what is more interesting and what we are excited about to slightly diversify it, getting more business in insurance and government. We have invested some amount of energy in last 2 quarters in building capabilities in that, ramping up sales teams. And we think the insurance and government also in subsequent quarters should start contributing in a meaningful way to the business. So we are very excited about the whole funnel and especially about the new initiatives we are launching in that.
Okay. Sir, this insurance vertical growth, will you be seeing that across your traditional and developed markets? And have you launched any new products in pipeline with respect to insurance?
Absolutely. So when we take a vertical, we have completely looked at the potential of that vertical across all markets. And I think we are investing in building solutions and what we call accelerator products in all markets in terms of looking at integrations in local ecosystems, looking at integration with third-party systems or core insurance providers. So we have really built product lines which are more fitted for each individual market separately, because what happens in enterprise product, a lot of integration ecosystem changes from market to market, and also the digital stacks change from market to market. So we have invested, and the work is still going on. It's not that we have completed all the product lines, but we are ready to go to the market with them. Now in most of these use cases, we are opening up pipelines in APAC. We have started building pipeline in India. US is showing some early signs of good, healthy pipeline, though we have not closed a new insurance deal out there so far, but we do expect in next 2 quarters we should be able to have some good wins out there. So it's broad-based, and we are building it as one more, like exactly like banking, we want to build over in multiple years a larger vertical for us.
Okay, got it. And can you talk about your progress on winning large clients in US and how many new logo additions have been in US in this quarter?
Yeah, so on the USA, I would broadly summarize it in work in progress. And though we have, as I told you, on the large client side, we have already got deals. So the ability to get these customers and as well as our products being helpful to those customers has been established. But the deal velocity in US is slightly muted. It's a bit slow. We are still hoping that both the insurance and banking as well as health initiatives in US start firing in Q2, so second half of this year, and we are able to get some more deals. But right now I would classify it in work in progress rather than. So right now the business is still relying heavily on our emerging markets, and we're hoping that our investments in mature markets start showing results in next 2 quarters.
Okay, got it. And so we have seen strong traction in banking in India and EMEA. But this quarter, the banking revenue, if you see YOY growth, is slightly lower than the company average growth. So should this traction in banking sustain in the medium term? Like, can you give some commentary on that?
So I think the quarterly growth rates are a factor of many things. We don't, as a company level, see any change in the market dynamics right now or the opportunity funnel size. On a single quarter, one license deal can change the number from 17 to 27%. So I think that's why the quarterly, the numbers are still. Having said that, the kind of momentum which was there for last 2 years on financial services, especially in India, is slightly, because we have also penetrated in a lot of accounts and now we are diversifying in other solutions like we talked about captive finances. And we are looking at still larger deals in trade and captive finance area. So I think some of those deals will start coming in the second half of this year and we should be able to recover the growth rate. In Middle East, again, I think Saudi is still not showing any signs of weakness. We are out there really working on very large deals. Some of them should come in now. I would broadly say that right now I don't see any concerns that there is any kind of a slowdown or a momentum shift in financial services in India and Middle East.
Okay, got it. And I had one last question on so what has been the response for the Lumen GenAI product which was launched last quarter, and in general on AI and GenAI, like what has been the response of the client?
See, the client, there's an enormous interest in every industry and every opportunity around AI in general and also lately generative AI in specific. So our ability to drive these use cases through AI is really showing a great traction in it and also opening new kind of opportunities in these accounts. But having said that, there is also a kind of what you call, there's an interest and then there is business. So the interest should translate into business downstream. So we do see opportunities, all opportunities having a strong flavor of AI. But we don't see opportunity yet just which are completely AI-led. So you have lending which has to be transformed through AI, but you will not have an AI use case independently running in the market. Too many of this we don't see. Health, both in claims and onboarding, there are great use cases of AI and GenAI which we are servicing. We have recently tapped into an industry which is about what you call regulatory frameworks and how GenAI can support those regulatory. I think we are building a strong funnel on that. So it's a work in progress. I would say, but without AI today or Gen AI being in the first two slides of any corporate presentation on any account, I don't think we will do a great job. The customer is demanding that to be at central to all the use cases he's implementing.
Okay. Okay. Got it. Yeah. Thank you.
Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Pranay Roop Chatterjee from Burman Capital. Please go ahead.
Hi. Thank you for allowing me to speak. Good evening. Am I audible?
Yeah, Pranay, please go ahead.
Great. Great. Sir, this is the first time I'm interacting with your business. So if you could just help me, and my first question is basically trying to understand your business. I've gone through all the public filings, but if you could just in simple words, so for someone who doesn't belong to the sector, help me understand what is the type of client you're trying to serve and what is the exact problem you're serving for them, right? And I've seen your R&D is also high and you have various patents. So what is the IP that differentiates the business? If you could just help me understand in simple words.
Yeah, Pranay, I'll try. Because it's a long story, but I'll try to. So Pranay, predominantly we are a software product company. That's why you see a huge investment in R&D as well as patents. That's a part of. So all our sales across whatever vertical or whatever solution we are talking is led by sale of our software licenses, and then which eventually ends up followed up with other revenue streams like what we call services, implementation, support, or any other thing of that. So predominantly a license-based business. The end customers which we are targeting are generally enterprises, the larger enterprises. So our sales model is B2B. It's typically an enterprise sales model. And the kind of problems which we solve for these enterprises are in financial services is the larger part, almost 70% of our business comes. So we end up solving problems about customer servicing, things like how a loan is processed, how a loan is approved, how an account is opened. So we sit between their core infrastructure, their systems and their users, whether they're internal or external, and orchestrate their journeys. So predominantly a bank would look for us to orchestrate and modernize their digital journeys, for whether in any process, whether in customer service or customer origination or any more complex processes like trade. That's our business. The same product is sold to all customers and all use cases predominantly with frameworks of implementing the customer's use case over that. So I have the same product being sold to insurance, bank, government, health, or any other segment. So that I will stop here because explaining the business beyond that will take much more larger time.
Got it, sir. That does justice. So then continuing from that, would you say you're in a space which is highly competitive and you have to, fight for a contract with multiple clients, or is this a space where you are relying on specific solutions that you are developing for specific clients, and hence the focus is essentially just on business development, that is signing new clients, and then you build specific solutions? Like, how is this market that you're operating look like?
So any product, so basically the product space we operate is called broadly enterprise content management, business process management. This is a contested space. It's a product space, so platform products are generally companies who have been there for 15, 20 years, they operate. In every such area, we have 4 or 5 global players who compete with us. And then depending on what markets and what use cases you are strong with, you end up having more stronger muscle to sell in out there. So it is typically, for our perspective, it's a sales and marketing led initiatives to go and sell with R&D based core product as a differentiator of how you solve your problems to that. So it's a highly competitive space, and you differentiate by your ability of your product and your ability of your team to service the use case.
Perfect, sir. So my last question is, what does a typical contract that you sign entail, right? So let's take a larger segment, which is your BFSI space, and a typical contract, which is like something that you do more often than not. How large a contract are we talking about that you usually target in terms of range? What is the contract life, and what is the recurring portion in that contract? Like, which streams are recurring, and do you see over time, or do you focus on increasing the recurring portion, in your revenues? Is that even possible?
So, Pranay, basically what our deals generally on an average, when we enter an account, vary between somewhere around $700K to $2 million. On an average, there are larger deals and then there are smaller, but this is an average framework. All deals initially are roughly around 60% license fee and some 40% which is called implementation charges, which is to configure the system for the user. Beyond that, there is a 20% annuity which customer pays on this fee to maintain and support, have right to upgrade. Thus, the nature of the business is every time you end up selling, you end up creating some compounding effect. As long as the percentage share of your license to your revenue stays in the healthy, ratio that every deal you are making 50-60% license share, your annuity keeps on growing at a better rate than your growth rate. But if your service revenues become larger, then the annuity does compound, but does not compound at the same rate. So the nature of any software license or a subscription business is that annuity compounding does happen. Does that answer your question?
Yes, sir, that answers my question very well. Thanks a lot for being patient and great set of numbers. All the best. Thank you.
Thank you, brother.
Thank you. The next question is from the line of Mihir Manohar from Carnelian Asset Management. Please go ahead.
Yeah, hi. Thanks for giving the opportunity and congratulations on a good set of numbers. Sir, lastly, wanted to understand the Newgen Lumen side. If you could throw some color as to which area is this particular offering exactly trying to solve? Is it trade finance, is it working capital? If you can just throw some color on what is the use case and application over here, that will be helpful. And second question was on the restructured strategy. I mean, you mentioned that the restructured strategy of tapping larger accounts is playing out well. So if you can throw some color around the internal KPIs that we are tracking to get more confidence on this thing.
Yeah, Mihir, thanks for asking that. So first on the Lumen, so predominantly I can tell you what the product does and where we target it. Predominantly what Lumen is a product which lets use the traditional machine learnings but exposes it through a generative UI interface so that you could almost do what you call brainstorming, or you could do a very interactive discussion with the end business systems you have. So where we position it, we are right now positioning it wherever the customers find opportunities to either segment their information for cross-sell and upsell. So discovering which are the right opportunities for cross-sell. So we have a variant of Lumen which we call Harper, which is used in retail. Lumen we are targeting predominantly in financial services for cross-selling and upselling. So that is where but the product is very horizontal. It can be applied to many use cases, but we are trying to go to market initially on identified on these use cases. So predominant usage is going to be in retail journeys or in journeys like collection. We are not using right now on trade. Trade we have a very different product which is about document analytics. That's a very different product. So that's about the Lumen. On the shift of strategy, I think what predominantly, if you look at the KPIs, internal and linking it to internal goals and KPIs, our core strategy has been on two things. One is about increasing our average deal sizes every year. And then also getting the number of logos from mature markets. That is broadly because that ties up in terms of what we want to do. What we have shifted out is that we have shifted out from ability, to what you call in terms of giving options for our salespeople to go and sell at a lower price in terms of certain accounts. That means they have to pivot towards larger accounts to make those larger deals. Now, if you look at last 3 years data, our new logo acquisition or number of deals in general has been always flat. But we have grown at about 25% consistently on that. And the reason it is that because we have changed the per deal size about that. So the KPI is not based on the strategy of shifting out. The KPI is more based on the revenue and number of logos and how the revenue in terms of annuity ratios of those logos come in. But the result of all that is that finally we have to make sure that we are able to get business sizes up in these geos. So what has happened in that, the traditional markets have responded very well to that, and we have got much larger deals in Saudi, much larger deals in India, APAC. US, we have got the inroads into some large accounts, but we have not had the follow-up sales at the same velocity as in these markets. So that's why you see the market lagging at between 16, 17, 18% of growth. So it has not matched the growth rate of that. Having said that, we are hopeful that in next 2 quarters, we should, with both insurance, health and banking, kicking in slightly, we should be able to get some more new logos and build the momentum.
Sure. Yeah, that's it from my side. Thank you.
Thank you, Mr.
Thank you. The next question is from the line of Mohit from Oculus Capital. Please go ahead.
Yeah, hi.